Will Tata AIA Life Insurance Smart Value Income Plan aid you in achieving your financial goals? Will it be adding value to your investment portfolio or not? Let us see this in detail in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions to reach your financial goals faster and smarter. Tata AIA Life Insurance Smart Value Income Plan is a non-linked participating individual life insurance saving plan. In this video, we will see its features, benefits, advantages, disadvantages, and compare its internal rate of return with other investment products to see how it fares. Now let us dive into the video. Now let us see the features of this plan. There are two sum assured options under single pay. Sum assured 1 gives you the death benefit multiple of 10 times the single premium. Sum assured 2 gives you the death benefit multiple based on the entry age. There are also two plan options. Plan option 1 gives you the choice of receiving your cash bonus as early as from the first month in your sub wallet in the case it is declared. Plan option 2 gives you the choice to accumulate your cash bonus if it is declared till the end of the policy term and receive a hefty lump sum amount at maturity. There are also multiple options to choose from as your policy term and premium payment term. In the Life Protect feature, you can skip premium cover if you need to postpone premium payment due to unavoidable circumstances like loss of income or unemployment. The life cover continues even in such cases. Now let us look at the advantages of this plan. Under the various premium payment options, you can choose a policy term of up to 100 years or else you can choose a limited period of 10 to 50 years. The survival benefit will be paid out on survival of the life assured till the end of the policy term. Flexibility is available to the policyholder to choose their premium payment modes. The policyholder has the option to receive his cash bonus in hand or as a sub wallet. Riders can be attached to the base policy at any time or on the policy anniversary during the policy term. Loan option is also available with 80% of the surrender value. The premium offset feature is available both in regular or limited pay options. The disadvantages of Tata AIA Life Insurance Smart Value Income Plan is all the cash bonuses and the terminal bonuses are non-guaranteed benefits. So these bonuses are not uniform all throughout the policy years. The survival benefit, meaning the cash bonus will not be sufficient to meet any big ticket expenses like your retirement or your child's higher education or their marriage in case. The lock-in period for this policy is 2 years. If you want to take a loan or if you want to surrender this policy, you have to wait for 2 years. The sum assured is also too low. In the case of death benefit, it may also not be sufficient to meet any future financial goals for your family. So far we have seen the features and the policy options and the advantages and the disadvantages of the Tata AIA Smart Value Income Plan. To decide the suitability of this plan to your financial requirements, we need to know its cash flow in detail. So first we need to figure out its internal rate of return. So now let us do that with the help of an illustration. This benefit illustration is taken from the Tata AIA website to come up with the IRR. So now let us conduct a detailed analysis of its internal rate of return. First, we will assume that there are two males of 30 years who takes the same policy with the basic sum assured of 12,50,000, an annual premium of 1 lakh, and their premium paying term is for 8 years, and they also take a policy of 40 years. But one male takes the option 1 cash bonus as their plan option, and the second one takes the option 2 accumulated cash bonus as their plan option. From the benefit illustration, it's assumed that the investment rate of return at worst case scenario is 4% per annum and at the best case scenario it's 8% per annum. So under the option 1 cash bonus, at the worst case scenario the IRR works out to 3.23% and at the best case scenario it works out to 6.3%, which is compared to the second option accumulated cash bonus, the IRR, where the IRR works out to be 3.18% at the 4% worst case scenario, and at the best case scenario it works out to be 7.01%. Slide. The IRR of both the options are very similar and only has a very slight difference. So from this we can understand that the IRR ranges from 3 to 7%. See, at the worst case scenario, the 3% is comparably a little bit higher than your savings bank account of rate of interest. And at the best case scenario, the 7% could be slightly higher than your bank FD rate of interest. This rate of return will not be sufficient to fulfill your family's financial dreams. So under both options, the IRR of this does not provide the policyholder with inflation beating returns in the long term. So these returns are not favorable in the long term. Moreover, the sum assured guaranteed on the death of the policyholder is also very low compared to other policies in the market. So as an investor or as a policyholder, we have to look at some other alternatives to get a better return on our investments. So let us assume a similar cash flow as in the illustration of option 2, accumulated cash bonus. Like the annual premium of 1 lakh can be invested in a pure term insurance policy and the balance amount can be utilized for accumulating the corpus for our financial life goals. So let us look at how this strategy might fare by investing in other alternative investment options. So let us assume Ram considers buying a pure term insurance policy and investing in an ELSS fund with a similar cash flow of 1 lakh rupees for the same period of 8 years as an investment. The annual premium for pure term insurance is 28,000. So he allocates the remaining amount of 72,000 to invest in ELSS mutual fund. The annual premium amount of 28,000 for the pure term is paid in the first 5 years and the balance amount of 72,000 will be invested in the mutual fund. So in the last 3 years, the full amount of 1 lakh will be invested in the ELSS fund. So finally, when we calculate the IRR and the corpus we will get at the end, the term insurance plus ELSS combo will provide you with a corpus of 3.72 crores and an IRR of 11%. This corpus accumulated will definitely help you achieve your life's financial goals with ease. Even in the best case scenario, which is at the rate of 8%, Tata AIA Smart Income Plan will just leave you with 1 crore at the end of 40 years. The pure term insurance plus ELSS combo, at the other hand, will yield you 3 times the Tata AIA corpus. So you might be wondering if you should consider investing in the Tata AIA Smart Value Income Plan. The Tata AIA Smart Value Income Plan definitely claims to offer its investors with dual benefits of life insurance coverage along with a cash bonus. But it's important to consider, will it add value to your investment portfolio? Will it be helpful or be sufficient enough to meet your family's expenses? So as per our analysis, it's evident that the annual cash bonus that we get from the Tata AIA Life Insurance Smart Value Income Plan will not be sufficient enough to meet your family's financial expenses. Since this cash bonus is also not guaranteed, there could also be a shortfall as even the accumulated cash bonus option score below the average rate of return. So through our research, it's evident that Tata AIA Smart Value Income Plan does not provide adequate life cover and also fails to help us achieve our financial goals. So investing in a pure term insurance policy with adequate life cover will help protect your family financially in case of your unfortunate absence. And for investment purposes, it would be better to choose a financial plan that caters to your financial goals and risk appetite. If you do not invest in the appropriate asset class, then you're essentially allowing inflation to take away your hard-earned money from you. So if you want to read a more detailed analysis of this insurance policy, we have a blog post about that on our website, which you can find in the link which we have given in the description. If you have any doubts regarding the topic we have discussed in this video, please comment so we can get back to your queries quickly. Also, if you have any doubts regarding mutual funds or any insurance policy in general, then you can always book a complimentary financial consultation with one of our financial planners to discuss about it, and the link is in the description to book your appointment with us. And if you want to gain more knowledge regarding financial investments and personal finance in general, we also regularly conduct live webinars for which also you can register by clicking the link in the description. Also, if you like our content, please like, share and subscribe to our YouTube channel. Thank you.